What's the number one question I receive on a daily basis? Is now a good time to buy a house? Are you following the markets? Are you watching CNBC, the money section of the World Herald? Are you seeing them talk about jobless claims, unemployment claims, businesses making record profits right now, but those businesses are not hiring? How does that affect you, and how does it affect the mortgage rates? We're going to talk about that today. All right. Now, how does all of this unemployment, stock market, jobless claims affect interest rates and affect whether you buy a house? Well, remember, without getting technical, there's three places to put money. Cash, that doesn't pay you any interest. Bonds, that has lower risk, lower interest. And equities, greater risk, greater rate of return, i.e. interest on your money. Well, right now there's a lot of fear in the equity market, the stock market, and there's a lot of interest in bonds because bonds give you a safe haven. Again, is that the right thing for you? That's your call with your specific money and your investments, but that's what's driving the market. Read more on this article this month and it'll help you understand that. Are home mortgage rates going up? That's the million-dollar question. What affects mortgage rates are mortgage bonds and the 10-year Treasury. Right now there's a lot of activity in the bond market because people are seeking safe shelter. They don't like the equity markets, i.e. the stock market, so they're looking to the bond market for safety. Can this continue? That's the number one question. Concerns that all of us should have is the debt the United States is carrying and the debt that all world countries are carrying right now. That affects whether the mortgage rates are going up or down. Read the article this month and continue to follow, and we'll keep you informed. Next question that a lot of people ask, how much house can I afford? Well, experts use 30% of your gross income should be an average monthly payment for your house you can afford. That includes principal, interest, taxes, and homeowners insurance, and private mortgage insurance if you're doing FHA or a loan with mortgage insurance. Remember that, 30%. Now there are qualification standards that exceed 30%, but that's what the experts should say. That's what I encourage a lot of my clients to work with. 30% of total gross income. And finally, the last piece of the puzzle today, we're going to talk about how much house can I afford. Once you qualify for a house, remember, an increase of 1% in your interest rate affects your ability to qualify by 10%. So if you're qualified to buy a $200,000 house and the interest rate goes up a full percentage point, you're really qualified only to buy a $180,000 house. So again, read the article this month. Keep in mind these tools will be available to you. You can call me anytime. Look forward to hearing from you. Let's talk in a couple of weeks. Terry Williams, the Mortgage Doctor.